Welcome to the special coverage of the RBI credit policy. I'm Ekta Batra and with me is Sonia Shenoy, and it's turning out to be quite a weak session ahead of the policy. In fact, we have the Bank Nifty, which is down around 0.4%. Remember, it was an underperformer yesterday. We have the Nifty, which is sub 8,400 as we speak. And besides that, the only key indicator otherwise is the bond markets, where the yield is absolutely unchanged at this point.
Indeed it is. So there's some amount of caution that the market is going with into this policy, down about 0.6%. But we have about 15 minutes to go, and as we have been telling you, there is a case being made for a rate cut of 25 basis points this time around. At least that's what 70% of the bankers in our poll feel. So let's go across to all our guests and find out what the finer nuances of this policy could be this time around. First up, we have Arundhati Bhattacharya, the chairman of State Bank of India, who joins in. And in a bit, we'll get all the other panelists into our discussion as well. Ms. Bhattacharya, good morning and thank you for joining us. What is your own expectation from the policy this time around, and what do you think could be the tone of the governor in the policy?
Expectation, I think, like the rest of the market, we do believe that 25 basis point cut is justified. We would still push for a CRR cut of 25 to 50 basis points, because I think liquidity could do with a little bit more of injection. So both taken together, I think those are the two things that we are looking forward to. Regarding the tone, I think it's clear that at this point of time, definitely inflation is on a downward trajectory. However, having said that, there are obviously one or two challenges. A monsoon has still not broken over the country, so that is one challenge. And of course, you know, taking off from that, there could be some issues as to, you know, how the prices pan out, especially prices of things like vegetables, etc. But still, I do believe that inflation will not go above the trajectory that the RBI has been stipulating. And therefore, there is a clear case for a rate cut.
Okay. Mrs. Bhattacharya, if in case that 25 basis points does come through, do you think that you could pass it on?
This is a decision that has to be taken by our ALCO. We'll see what can be done. As you can understand, we have been saying this again and again, that we also need to see a little bit more of credit growth pickup. We believe this is just around the corner, that it's going to happen. The indications are all there, and therefore, you know, it's a question as to whether we do the passing of the rate cut now or we wait a little while. But definitely, you know, the cycle, if you look at it, it's a easing cycle.
Okay, that's an important point that you made earlier, Ms. Bhattacharya, that, you know, if the government decides to await the progress on the monsoon, then perhaps, you know, the guidance could be a bit hawkish. In your mind, once we get this rate cut, do you think the scope for further rate cuts have been narrowed? And what is your own estimate of how the rate cycle will pan out for the rest of the year?
Actually, the scope for the rate cuts will depend, I think, on two major factors. One, of course, is the inflation numbers and our own IIP numbers, but also on the way the Fed rates move. I think that is the actually the elephant in the room that we are not really considering at this point of time. Because obviously, you know, if the Fed starts moving its rates up, and if that causes an outflow, then there could be some issues about lowering rates further. So that's something that we have to take into account. The good thing is that the expectation is already there, that the Fed will cut rates sometime, will raise rates sometime, say, between September to December. So we still, I think, have a window up to September. So that being the case, and if inflation keeps trending downwards, if the monsoon rains come in means at least, you know, the rains are widespread and they happen not too late, then I think there could be room for a further cut.
Okay, well, let's get in another banker to answer the same question. Mr. Dhawan, do you expect the RBI to cut rates today? If so, by how much? And do you think that you'll be in a position to pass it on?
Certainly, I entirely agree with Ms. Bhattacharya. You know, critically, inflation is below 5%.
Okay, I think there's something wrong with the link. So let's get in an economist's point of view then. Sonal, coming to you, what is your sense in terms of what the RBI could do? Do you think that maybe inflation concerns with regards to maybe a delayed monsoon and the Fed hiking rates could possibly weigh on their decision this time?
That actually is the primary argument for why the RBI can choose status quo, i.e., the risk of El Nino is quite high, and therefore RBI wants to wait and see how that pans out. However, I think the key question is whether or there isn't a room, and if there is a room to cut, then I think it's better they front load it, primarily because the transmission process takes a long period of time. And as we have seen, even with the unseasonal rains in March, despite almost 20% of the winter crop getting hit, there is actually no impact on food inflation. So the slowdown in rural economy is essentially taking care of the upside risk to food inflation, and it is quite likely that the same may actually play out even if there is some risk to rains this year. So in that context, we do think that it makes more sense to cut today than wait until August. If the decision is that there is room, if the decision is obviously that there is no room, then then of course a pause makes sense in general.
Okay, so there is an outside chance perhaps of a status quo in this policy. Let's get Sajid Chinoy into this discussion as well. Sajid, the transmission process has indeed taken very long into the system. I mean, we were speaking with Canara Bank just a while back. Despite a 50 basis points year-to-date cut, we've seen them transmit only 20 basis points to the system, to consumers. What is your own expectation? Do you think that this time around the rate cut will be front-loaded? We will get a 25 basis points cut? And if yes, going ahead, what would be your expectation in terms of further rate cuts?
Hi, good morning. So we are with the group that believes there is, the likelihood of a 25 basis point cut today. But I just think it's a much closer call than I think some in the market are making out to be. I think there is a reason here also to remain on pause. I think for me, the interesting part today is going to be how the RBI handicaps growth and inflation risks. I think notwithstanding what the GDP numbers say, the sense is growth risks have actually increased in the last couple of months if you look at the sum total of all the high frequency indicators. And then if you add to that the fact that the prognosis for the monsoon is not very good, so have inflation risks. So I think the central bank finds itself in a bit of a delicate position where it has to cater to both inflation and growth. And therefore, for me, what's interesting is going to be what is the outlook on that front. Last time the governor spoke about there being two-sided risks to inflation. I'd be interested to know whether that persists or whether the risks have become more one-sided and therefore in what direction. So I think those are the whole host of questions. I'll just make one final point. I think even if we get a rate cut today, I think there's a sense here that given that next year's inflation target is going to be 4%, given that the RBI, I think rightly so, wants to target a real rate of 1.5% to 2%, we have to perhaps expect that we're not in the midst of a large easing cycle here. We're only looking at opportunistically, one or two more cuts.
Right. Anand, what's your sense on the yield? It's currently the new 10 years at around 7.66. What do you think is factored in? And if in case there's a surprise on the upside or the downside of the consensus 25 basis points, how do you think the yield will move in both scenarios? No rate cut and maybe even 50 basis points.
Well, I think the market is penciling in a 25 basis points rate cut, followed by indications that there will be nothing further coming through unless the data was to indicate otherwise, i.e. the possibility of a prolonged pause. Now, if you do get that, if you get 25 basis points with an indication of a pause, markets, I think, will pretty much remain where they are. If you get no rate cut at all, then you probably see a sell-off about 10 to 15 basis points. The old 10-year could go up to 795 or so. If you do get 25 basis points with the door open for further rate cuts, you could see a 5 basis points rally. Maybe the new bond goes to about 761 or so. If you do get a bonanza of a 50 basis points rate cut, then frankly, the markets will be celebrating with 10 to 15 basis points of rally, and maybe that rally continues further. So I think that's the broad spectrum of alternatives you're looking at.